doing well. We've got a lot to talk about today, folks. The Middle East appears to be on the verge of descending into a broader regional conflict, and it appears that investors are finally beginning to come to the realization of what this is going to mean. And as a result of that realization, we are seeing the price of gold break above $2,000 today. And this is a pretty significant development on the financial front. This is the first time that the gold price has hit over $2,000 since May. So a pretty significant move in the metal today. And moving forward, I believe we are on the verge of a significant breakout in the price of gold and the price of silver as well. Again, we've got a lot to talk about today. I'm going to do my best to put this into a coherent narrative for you, but it's not the easiest thing in the world to do, so bear with me. Now, listen, I know I've received some heat in the past for talking about these issues in the Middle East. I mean, it's a divisive topic. It's, something that gets people very emotional, very fired up. But listen, one of the things I've heard is people tell me, stick to the metals, don't talk about this geopolitical stuff so extensively. Well, if you ever wanted evidence that what happens in the Middle East and what happens in the world geopolitically has a major effect on the precious metals, both gold and silver, you don't need to look any further than the price action that we are witnessing today. And that is why I focus on these topics fairly extensively when things are moving in a big way. Now, we're also going to talk about the price of silver. It's not just gold because we're looking at a breakout there too, but there's some interesting comparisons between the gold price and the silver price that we're going to examine today, and I'll tell you what I think they mean for the metals moving forward, because both metals are up today, but it hasn't been as bullish of a time for silver as it has been for gold. And thank you, Barbarian, there in the chat for the support for the super chat. Before we get into the news and where the price of gold and silver are headed, don't forget you can buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. All right, so again, we've got gold breaking out today above 2,000 bucks. Let's get right into what's going on in the Middle East and what this is going to mean for the metals. And then we'll take a look at this chart of the gold price, and I'll tell you, how I think the two are kind of correlated. So first off, we've got the combat in the Middle East in Hamas intensifying. There had been a lot of talk of a ceasefire. Actually, the price of the metals had kind of pulled back over the past couple of sessions. Not a lot, but they had been very tepid. But now it appears, based on the developments that we're witnessing over the past day and the past hours, it's not very ceasefire-y. Let's put it that way. For one thing, we're seeing internet access cut off to Gaza. Now, some folks are saying this is a result of diminishing fuel supplies. So I guess the ISPs are running out of juice to transmit. Also, this may be a sign that the invasion is imminent, for a couple of reasons. One, maybe the Hamas militants there use the internet as a way to communicate. So seeing their internet go offline could be a sign that they are under some kind of cyber attack, or perhaps the Israelis have done something kinetic to interrupt the internet connections there. But regardless, that means of communication will be offline, it appears. And, if you're going to invade a place, you might not want a lot of footage and a lot of coverage coming out of that because, Gaza is a small place. IDF rolls in there. It's going to be very intense, very nasty fighting. And it's probably not to the Israelis' benefit to have that kind of information being broadcast, too extensively. And again, I know this is divisive stuff. I try very hard not to take any kind of sides here, and I feel bad for any of the civilians who are suffering as a result of these things. Truly, there are a lot of innocent people who are suffering. We should keep that in mind, people on both sides. Again, I'm just trying to keep this as objective as possible and tell you what I think this is going to mean for the metals. And listen, I'm sure that somebody's going to get upset about the things I'm saying in today's live stream, and they'll be spamming all caps messages at me. But listen, if you're falling into that camp, if you're thinking that that somehow helps anybody on the ground, I think you're mistaken, and you'd be much better off putting that energy that you have, that so many people seem to have at the moment, towards getting yourself better prepared for what is coming. Getting supplies of food and water and precious metals and security and everything that you're going to need when this really plays out. Because this move that we're seeing in the price of the precious metals and this escalation that we're witnessing, it is a sign of things to come. But this is just getting started, folks. At least that is my take. And, maybe you don't think so. Maybe you disagree. Do me a favor. Put a 1 in the chat if you think that this is the verge of a major escalation, if that is the direction we're headed in. Put a 2 if you consider this message to be a bit alarmist, if you think maybe I'm just doing a little fear-mongering here, or if you think everything will actually calm down. Because look, I don't know how this is going to play out. I'm just telling you how I see it. I don't see a de-escalation on the way. It looks like a lot of people are in the same camp as me, but certainly, if you disagree, you maybe are not wrong. It could be that this thing doesn't blow up, but I just don't see it that way. And, if you get better prepared for what's coming, worst case scenario, actually best case scenario, is that none of this escalates, and now you've got better preparations for the future. So I think getting better prepared is a win-win no matter what happens. But it's looking like now might be a good time to be getting prepared. Not financial advice, of course. Now, this is a report from the U.S. Sun, which I do think is a bit of a tabloidish paper, so you got to take this with a grain of salt here, but this headline I think is interesting. Fears all Iran-backed militias will unite and invade Israel to reap terror as chilling threat appears on Lebanon border. Now, the threat they're referring to is this mural, which was painted on the Lebanese side of the border. Now, of course, Lebanon and Israel share a border there to the north of Israel, and Lebanon is home to Shiite militias who have been trained and armed by Iran. This is a picture of Qasem Soleimani. This is the guy who was assassinated by the U.S. via airstrike. And along with him there, you've got all these flags of all of these Shiite Iranian-backed militias. And, this is not that unheard of. It's not like it's a complete out of left field that these militias may launch a broad attack against Israel. Certainly there have been a lot of threats towards Israel if they invade if they invade Gaza to root out Hamas, if they proceed with a ground invasion. One of the things we've heard is that Iran may decide to intervene here, may launch some attacks. And, if all of these Iranian-backed Shiite militias do decide to attack Israel, it's going to be a real problem. It's going to be very difficult for Israel to fight a multi-front war. They are, they're outnumbered in terms of manpower significantly here. Hezbollah has been, getting trained and armed. They've got, I think, 100,000 fighters under arms in Syria and Lebanon. That's going to be really tough for the IDF to fight with. And they've also got much better weaponry than the last time Israel went to war with them in 2006. And that was no cakewalk. So this is something we need to watch out for. This is the guy, the replacement for Soleimani there. Now, let's go to some other escalations here, because that's something we absolutely have to watch out for, is a broader attack. I want to go back to this Wall Street Journal piece. Sorry, I've got my stuff mixed up here. Let's talk about what's happening, the most recent updates, and then I'll tell you why I think this means we're headed towards a broader conflict. So you've got Israel urging Palestinians to leave northern Gaza. That is another indication that a ground invasion, a ground incursion could be right around the corner. And if that happens, that could well be a trigger for these Shiite militias to attack. And if that happens, well, to give you an idea of what that might mean, we have the carrier strike group sitting off the coast there. The USS Dwight Eisenhower is on the way, a second carrier strike group. Now, we've already got U.S. military forces conducting airstrikes in Syria, another one of these recent updates, in what the Pentagon said was a move to deter Iran-backed militias from broadening the conflict in the Middle East. But I'm not sure how conducting airstrikes is going to de-escalate things. That's just my take. Maybe it will. Maybe it's a show of force. But when you have an ideologically driven opponent, fear is not a real driving factor for these folks. So I don't necessarily know that's going to diminish the risks of an escalation. And it would appear that Russia feels the same way, as they have said that U.S. strikes in Syria are, quote, very bad. Well, okay. But however, this is signs of a broader regional tensions, and they defend inviting Hamas to Moscow after Israel criticized them for this. Now, it's no secret that Syria and Russia are pretty intertwined militarily. Russia supporting the Syrian army throughout their civil war that they've been fighting for some time. There's been a proxy war going on in Syria for some time between the U.S. and Russia. The U.S. still has troops there. Those are some of the folks who were attacked in those drone attacks. The reason that the U.S. is citing for launching this retaliation via airstrikes. So you can see how this ramps up the tension there. And, I think we're one mistake away, one red line away from seeing things really devolve. Now, when that happens, let's go back to the gold and silver charts real quick, because you've got this formation in gold here, right? The long-term chart of gold. You have a cup and handle formation. And this is a very bullish formation, by the way. This goes back to 2011, the highs there. Got this nice bull forming. Now, normally on a cup and handle formation, you would see a downward sloping handle, but if you actually adjust this chart for inflation, that's exactly what you have. And, the reason I say that this is not necessarily a confirmation of a huge breakout in gold, but we are very close to one, is the next breakout in gold, based on this chart, is going to occur when gold gets a really solid close above these previous highs that we've tested 3 times, okay? And that's just below $2,100. So if, we get a major escalation, we're getting very close to this line. I think we are one event away from seeing the price of gold get a strong close above this line. And when we do, it is going to mean it is off to the races for gold. It is going to mean both precious metals, both gold and silver, are going to be moving much higher. So I still think that even though the price of gold and silver are up today, it's still a good time to be accumulating, given the level of risk that exists out in the Middle East right now. Do me a favor real quick. We're at 255 people in the live stream, 66 likes. Smash that like button if you haven't yet. Do me a favor and just help get this information out into the algorithm. Okay, so let's take a look. This is from Zero Hedge. These are some interesting charts that they had in an article related to the precious metals prices. This is the gold ETF outflows. So these blue bars here below the center line of this chart is representative of the weekly change in ETF holdings. And then this black line is a chart of the gold price. So you can see that even as gold has begun moving higher here off of these lows, and this is a very steep move if you notice. I mean, we're talking about a move from the low 1800s to over $2,000 in a very short period of time. So this move definitely has some momentum behind it. But look, the ETF holders, the GLD, any other gold ETFs, have been selling. So, one thing that this makes me wonder is if some of the smart money out there might be divesting themselves of paper gold and purchasing real gold. I mean, they could be purchasing futures contracts too, I suppose, but it's possible also that they're going into other assets like treasuries. But I wonder how many people are selling their paper ETFs and getting physical metal because of the fact that, I mean, let's face it, if we go to World War III, we get descending into a broad regional conflict, who's going to feel very confident holding paper gold? I mean, I personally wouldn't. I would want the real physical metal. I don't hold any gold ETFs or silver ETFs right now. Just physical metal, because what I'm looking for is, real store of value, not a derivative of that store of value. The lack of counterparty risk that gold and silver have really is one of their most appealing characteristics. And so even as you see this price spiking up, folks are selling their paper gold. Now, one thing I think that this indicates is that when things really do go to the races, when they really break out of this long-term pattern, one thing we might see is that the price of physical metal may move much faster than the spot price. Of course, this is a chart of the spot price, but if we really see a safe haven bid for gold, one thing that we've seen in the past, anytime that there's a lot of market uncertainty, is we see the premiums on the precious metals exploding and the availability of physical metal declining. And, that's because there's a lot more paper contracts and paper ETFs out there than there is actual underlying physical metal. So yeah, you can always buy as many shares of GLD or SLV or whatever, but you can't drop those on a table and make that noise, right? You can't hold them in your hand. And it's no secret that there's a lot more paper out there than there is physical underlying metal. So I think that this chart is very interesting. Now, here's another one. This is actually comparing, as of October 20th, the price of gold and silver. And you can see gold catching a strong safe haven bid, moving up in a straight line. Silver actually kind of declining. Now today we did see the big move up in silver. Not a huge move. Let's not mischaracterize things here. But you can see the silver price has been falling in the long term. Now what does this tell us? Does this tell us that, just sell all your silver and buy gold? Well, no. I mean, silver, I think, is still the most undervalued asset out there. But here's the deal. When you see bull markets in precious metals beginning, very normal for silver to lag gold. And that is why I believe we are viewing just the beginning, the very beginning of a nascent gold market. Now, when things really break out, we're going to see both metals move. And if you want to know why, look at the chart of silver, because it has a very similar pattern to gold. You've got a cup and handle forming on the long-term chart. Now on this one, I've added this downward sloping trend line from the 2011 highs, and you can see that coincides with the top part of this handle on the cup and handle. Now silver also very close to breaking out. So, we see silver close, let's say above maybe 24 bucks, 24.50. We see gold close above 2100. Well, then I think we're going to start seeing days where gold may put on $100 in a day. Silver may go up 10, 20% in a day, especially if you see the US using those carrier strike groups there on Iran, on Iranian oil infrastructure, as Senator Lindsey Graham has threatened. If you see the Strait of Hormuz get closed, if you see Lebanese and Syrian Shiite Iranian-trained militias launching an invasion of Israel, these are the red lines that, if they occur, I believe we will see the price of gold and silver driven to explode out of these charts. Now, based on these charts, I think the price of gold and silver and just the fundamentals and, all the money creation and the financial chaos here in the US, I think they're on the verge of a breakout anyway. But if you want a catalyst for that, I mean, today, sure, there are signs of a breakout, but just look at what's happening to the price of gold. And I see some people in the chat there saying $2,000 is nothing for gold. And I mean, I tend to agree with you. I think that, again, this is just the beginning, but this is the first time that the spot price has moved above $2,000 since May. Now, futures contracts actually even a little bit higher. If we can take a look at the December futures contract for gold here, it's at $2,015. The futures price, maybe it dropped. I don't know. I don't know why it's saying 1900. This is some kind of a Yahoo Finance glitch, I think. There we go. It was loading old numbers. Oh, or not. I'm not sure. It still says it's 2015 here. Anyway, Yahoo Finance messing with me. Again, this is the beauty of live streams, right, folks? I don't think that we've witnessed a strong drop in the price of gold. No, TradingView still confirming gold is up. But the point is that, the spot price is now above $2,000 for the first time since May. We've seen it kind of, go above that in the futures contracts a little bit, but 2000 is just the beginning. Now, if you take the all-time inflation adjusted all-time high for gold back from 1980, and I know, you can do this for silver or gold, but people always want to talk about the Hunt brothers when you talk about silver. So let's just talk about gold. Gold hit $850 back in January of 1980. And, if you want to see the daily prices for gold, SD Bullion actually has a pretty nice tool for that. You can Google SD Bullion daily prices, and they have for all years. You can go back to 1980 and see the open and closing prices on a daily basis. But if you take that price and you adjust it for inflation, even just using the CPI, which understates the level of inflation significantly, you get a number of around $3,300. And I mean, I think that we could easily head towards that price level in gold, and certainly a regional conflict in the Middle East would be a catalyst to drive us that high. Of course, that's just the inflation adjusted high using the CPI. If you use real inflation, you can use John Williams numbers from Shadow Stats. You're going to get a number around $4,000 or $5,000. The sky's the limit for the precious metals here, folks, because the thing is, a broader regional conflict here, if it involves Iran, it's going to mean a lot of inflation. It's going to mean the price of oil goes through the roof. It's going to mean the price of gold and silver go through the roof. But if Russia and China get drawn into this conflict, if China takes out Taiwan while the U.S. is busy in the Middle East, if Russia gets involved, they're flying MiG-31 patrols over the Black Sea armed with hypersonic Kinzhal missiles right now. If those get utilized against a U.S. aircraft carrier or U.S. forces in the Middle East, then you're talking about, a real problem for the dollar, because the dollar's reserve status, which is already coming under significant pressure, is going to be put in tremendous jeopardy. If you get the OPEC nations to just openly dump the petrodollar, if you get China dumping its nearly $1 trillion of U.S. treasuries, and I think it's over $1 trillion if you count the Hong Kong holdings, then you're talking about gold and silver prices moving. I mean, who knows how high when valued in dollars? It might become meaningless to even value them in dollars at that point. So keep in mind that, global wars are one of the most inflationary events that can occur. Many hyperinflations throughout history have been preceded by global conflicts. And, one thing, if you do see a broader regional war that the U.S. gets drawn into here, it's highly possible that the Fed could decide to begin easing. What better excuse, right? The U.S. economy needs it because we will be suffering from much higher energy prices. Only this time, I think that the Fed, trying to resolve these problems with the one tool they have, the printing press, ultimately is just going to exacerbate these problems. So I'm kind of just ranting now, folks. But listen, the important thing to note here is that the metals prices are on the verge of breaking out. And it's very possible at any moment we could see a significant escalation in the Middle East. So you don't want to wait until it's too late to get prepared. Do whatever you need to do to get prepared right now. Take a lesson from what's happening in Gaza right now. They're having a total internet blackout. Think about how it would be for you if you had a total internet blackout. What would you do? Think about what would you do if you woke up and the price of gold tomorrow was $3,000. Would that affect you? Would it be to your benefit? Would it be to your detriment? Don't count too much on paper assets in these times, folks. We are in a time of tremendous change. And for me, having hard physical assets is a very important part of being prepared for what is coming. But let me know what you think in the comments down below. Thanks for watching, everybody. Please smash that like button. Don't forget to like, comment, subscribe, tell your friends, and I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker, out.